Monday morning. Welcome back to Squawk. Our next guest says there have been inflows in both equities and bonds in Asia, so none of this rotation from credit into stocks, as many have been talking about, seems to be taking place in this part of the world. For more, joining us now from Hong Kong is Carl Wong. Carl is the head of credit research at Samina Capital, Hong Kong. Carl, give us your view on the great rotation debate. A lot of people have been calling for this to take place globally. Has it happened anywhere in the world yet?
Yes, indeed. We don't think it actually happens in Asia. From the data that we've collected, basically emerging market bond inflow was about 12 billion this year, and emerging market equity inflow was about 31 billion. So if great rotation takes place, it should be money flowing out from the bond market into the equity market, but it simply doesn't take place in Asia.
Why are both asset classes holding up so well? Is it because the backing of the central banks are there, so investors think, you know, bonds not going to be going down anytime soon?
Sure, yes, I totally agree. I think central banks printing money is one of the major forces to keep this market on hold. Basically, by printing out more money, right, they actually take out the risk-free assets from the market and force people to invest into more yielding assets or riskier assets. And that's why both equity and bond, corporate bond, benefit from this trend.
I know a lot of corporates in Asia have been issuing bonds, and there's been demand. Are you seeing a tick up in volumes, and where are the opportunities for investors? Because everyone's looking for yield right now.
Yes, I think in terms of supply, right? January were one of the most busiest months that I have in my entire career, and in fact, there were about like over 20 billion of new supply in the Asian bond market. On the other hand, given the inflow into the bond market, we kind of like have a cross. We see rising supply and rising demand. So where we see right now is market is digesting the new supply, but once this digestion is over, I think the market will rise again.
You know, Carl, something that could have an effect, possibly a big one, on this rotation, when it happens and how quickly, is what happens in Japan. And we're just getting this breaking over the wires. The BOJ governor nominee, Kuroda, saying an end to deflation in Japan will help Asian economies and the global economy. Ending deflation is Japan's biggest challenge. And he also says stabilizing prices is the central bank's responsibility, and he says his top priority is going to be hitting that 2% inflation target. What's your sense? What's your view? Are they going to be able to do what they want to do?
Well, I'm a little bit skeptical in that one. Put it this way, currency is a relative concept, right? This is measuring the value of one thing against the other. If you are the only guy in the world who keep printing money, your chance to succeed is much higher. But now we've got 5 major central banks in the world doing the same thing. I think the effect will be diluting out against each other. So I think the Japanese government and the BOJ will have a big mountain to climb. But having said that, by providing a lot of liquidity into the market, as a fund manager, I think we're actually enjoying the mini bull cycle, which we want that to last as long as it can.
Okay, here's something else over the wires. Kuroda saying that the size and type of assets the BOJ now buys is not enough to achieve 2% inflation, that hard target that they've set for themselves. What does this suggest to you? Are we talking about allowing BOJ to buy foreign bonds, or is that still a bit of a stretch?
I think they will probably do more then.
Come again?
Sorry, I think they will probably do more. Yeah, they will buy more. Well,
including foreign bonds?
Well, no, I don't think they will do the foreign bonds. Sorry, I missed that. Yeah.
All right.
Carl, give us some buying ideas right now in the Asian credit space. What looks good to you? Indian property, Indian banks, China? Where are the deals?
Well, on the long side, we particularly like Japanese CB. For a couple of reasons, right? One, the implied volatility is going up, equity market is going up, credit spread is really stable, and don't forget that a lot of the Japanese CB are denominated in US dollar, which is a natural beneficiary of a weaker yen. On the short side, we don't like Chinese coal. We think Chinese coal is facing a structural decline at the moment. Just put it this way, if I were President Xi, right, I don't want myself and my family to live in a place where the PM 2.5 concentration is the highest in the world. I think they're probably hitting a tipping point right now, which will boost up a lot of demand in alternative energy and reduce the demand on coal.
What about dim sum bonds, Carl?
Dim sum bond, I think this is a good market. Looking at from supply and demand perspective, right? On the demand side, Hong Kong had a deposit base of nearly 600 billion renminbi, and on the other hand, they only got about 90 billion of dim sum bond supply. So there is still a lot of demand for the depositor to swap from their very low deposit rate in order to make more yield, high yield by buying those dim sum bond. And on the supply side, the Chinese corporates still got a lot of incentive to issue dim sum bond because the onshore rate and the offshore rate differential is still very high. And don't forget that dim sum bond is a less regulated market. You don't need the regulator approval, you don't need a credit rating. It's very easy for them to issue the papers. But bear in mind that this is only a transitional product in a transitional time. So if Chinese leader decides to speed up the renminbi internationalization, or one day the expectation of renminbi appreciation subside, I think the dynamic of this market could change very quickly. I think these are the two risks for holding dim sum bond at the moment.
Okay, listen, Carl, great to talk to you. Appreciate the time. Do it again soon. Carl Wong, Samina Capital.
Thank you.
Hong Kong from our studios there live. Still ahead, will Chinese drinkers switch their baijiu